Time is an investor's closest friend. With good resources and appropriate skills, the more time you have, logically, the more you're going to earn. The inflation is growing at an increasing rate, and markets are becoming more and more unpredictable with every passing day. These conditions are indeed getting worse with the passage of time. Therefore, investment is a decent option to build a nest egg for your future. And for young investors, this is not only a good way to accumulate their wealth in future, but young investors can also supplement their income, save for a house, or maybe even save for college. Hey guys, this is Prarthana from Cleartax, and without any further delay, let me give you 5 tips for young investors who are saving for the future. Number 1. Begin your investing activities as early as possible. The earlier you start investing in your financial life, the less financial burdens you will have in future. For example, spouse and kid expenses, mortgages, etc. will come at a later point in your life. Hence, you can easily make a regular, substantial monthly payment in the initial year of your youth. Investing early will also have more interest compounding. Number 2, learn and educate yourself with the entire process. It is essential to be familiar with the market and understand the business you are investing in. For example, in the beginning, 10 lakh INR may look like a huge sum, but 10 lakh today might be worth 8 lakh in a few years due to inflation as money loses its purchasing power. Therefore, for a couple that wants to use that money after their retirement for another 20 years or so will not benefit. Therefore, it is essential that you know the process, the costs involved in the stocks and equity options. Number 3, choosing between stocks and bonds. Young investors find it difficult to choose between stocks and bonds. Stocks are more risky but have a higher return than bonds in the long term. But bonds do have an advantage over stocks. That is the promise of payment, where a stock may not have any form of payout in the future. So, choose wisely, youngsters. Number 4, learn to save rather than spend. To be an investor, you need money. To have money, you need to save rather than spend. This advice is the most obvious one given out by the top business professionals. Hence, without further ado, to be a successful investor, you must do something that nobody in the world wants you to do, and that is learn to save your money instead of spending it. Number 5, diversify your portfolio. Diversifying your portfolio means you must at all times maintain a portfolio that is composed of all kinds of assets, from high risk to medium risk to low risk. The wise decision to make is to reinvest your returns to earn greater returns rather than spend those returns. For an investor, this is the best way to prevent a massive setback. Youngsters, the one thing in life you can control is your effort. If you're willing to put in the effort and brain power, anything is possible. I really hope that these tips will help you amp up your investing game. Do you have anything more to share? Definitely let us know in the comment section below. Also, don't forget to give this video a big thumbs up and subscribe to Cleartax's YouTube channel for regular videos on finance. Stay tuned and take care.